The sixth bi-monthly monetary review, the last of the current financial year, left policy rates unchanged. Its guidance for inflation and growth for the next year suggests inflation down to 5%, growth up to 7.6%.
The Reserve Bank of India has kept key policy rates unchanged in its sixth bi-monthly monetary review policy on Tuesday. The repo rate remains at 6.75%, the reverse repo rate at 5.75% and the CRR at 4%. This is in line with expectations. The marginal standing facility rate and bank rate are at 7.7%. The monetary side will now wait for the fiscal side before it takes further steps, and also says that reforms in budget will create space for a rate cut.
The Indian economy is currently being viewed as a beacon of stability because of the steady disinflation, a modest current account deficit, and commitment to fiscal rectitude. This needs to be maintained so that the foundations of stable and sustainable growth are strengthened. The Reserve Bank continues to be accommodative, even as it leaves the policy rate unchanged in this review, while awaiting further data on the development of inflation. Structural reforms in the forthcoming union budget that boost growth while controlling spending will create more room for monetary policy to support growth, while also ensuring that inflation remains on the projected path of 5% by the end of 2016-17.
The central bank sees the inflation target of 6% for January 2016 being met and expects inflation to be around 5% in financial year 2017 if monsoons are normal. It also said prospects for the Rabi harvest are improving. It says that the Indian economy is being viewed as a beacon of stability and has pegged growth at 7.4% for the current fiscal of 2016, rising to 7.6% in fiscal 2017. In keeping with the government's Startup India initiative, the Reserve Bank will take steps to ease doing business and contribute to an ecosystem that is conducive to growth of startups.
The Reserve Bank will take steps to ease doing business and contribute to an ecosystem that is conducive to the growth of startups. These measures, which we'll announce shortly, will create an enabling framework for startups receiving foreign venture capital, will also allow differing contractual structures embedded in investment instruments, allow differing receipt of consideration for transfer of ownership, create facilities for escrow arrangements, and simplify documentation and reporting procedures.
Currently, the focus shifts to the budget, where the RBI hints at the need to maintain fiscal discipline for a strong foundation of stable and sustainable growth. The monetary policy suggests a need for structural reforms in the forthcoming union budget to boost growth. This was also highlighted by Finance Minister himself on Saturday. News Night Desk, DD News.